Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. In today's clip, we're breaking down the Michael Saylor's strategy, Bitcoin strategy. So, strategy being the company, but also how they have created all these different preferred equity options within the company. And if you're like me, then you probably had no idea what these were. And hopefully by the end of this video, you will understand what they are and how they work and how, yeah, he's an engineer. He has created something that is truly groundbreaking and a flavor, so to speak, for no matter who wants to invest in what your risk appetite is. So I'm going to play the first kind of clip from him, but you can see in this presentation kind of the valuations and where they're sitting at with these four different options. And he explains them in this in much more detail, but I'm going to try to give you the dumbed down, watered down, simple version because listening to Saylor wax poetically on things like Bitcoin and engineering and things of that nature, you might get lost in the sauce. So let's play this first clip where he's kind of introducing how strategy fits into the Bitcoin architecture for clients.
As you can see here on this slide, our company's strategy sits between the crypto economy and the traditional finance economy. So the primary asset and the foundation of the crypto economy is Bitcoin, which is worth $2.3 trillion. And when I think about the crypto economy, I think about every country on earth and every capitalist on earth, 24/7, 365, acting rationally in whatever their economic interest is. That's being manifested on Saturday night, and that's creating extraordinary performance and extraordinary demand to the underlying collateral, which is BTC. However, most of the world is unable to access the crypto economy, and so what we're doing is refining, and we're harnessing the power of the Bitcoin asset, and we're able to actually refine it into low volatility, low leverage, less risky financial products, and then higher volatility, higher leverage financial products. So just like you might refine a barrel of crude oil into kerosene, which would be very, very pure, and asphalt, which is not so much, we're basically providing a function that, say, an ETF cannot provide. You can see IBIT, the most famous example here in this chart. It basically wraps Bitcoin in it, and it serves up a security flavor of raw Bitcoin to the investment community. We, on the other hand, are offering stepped down elements: convertible bonds, convertible preferred stock, senior fixed stock, junior high yield preferred stock, and of course, this treasury preferred stock in the form of Stretch. We're offering those, and those, in essence, we're stripping and modifying the duration of the asset, and we're also stepping down the volatility of the asset, and we're actually extracting the yield from the asset, which is Bitcoin, and we're serving it to each of these fixed income investors.
So before we go into each one of these, and I'm not going to play his clip from each one because that would get extremely long. Just going to give you one of these from Saylor, and then I'll give you the watered down version. That might be easier to digest. But the more that I dive into this, the more I understand that there is a place for this. I know there are some Bitcoin maxis that feel like, you should be keeping Bitcoin out of the hands of the Wall Street tycoons, and it's Bitcoin is for the people. But the whole point of Satoshi's white paper and creating Bitcoin and the open source model and decentralized is that any and everybody has equal access to it. There is no governing body that says this person can have it and these persons can't. So good, bad, ugly, and all in between, everybody gets access to it. And then I forgot who coined this phrase, but you all get Bitcoin at the price you deserve. So right now you're seeing that Saylor has created this playbook. He's first one to do it, but there are others coming right behind him copying this strategy. And if you're not waking up to this, then the only solution option in game is that there's just not enough Bitcoin to go around. So what's cool about this little chart is that he's showing you the different options available to get involved. So like at the top, you have the traditional markets. So you have the MSTR, which is MicroStrategy stock, which got rebranded to strategy. So this is where the traditional Wall Street money is sitting. And this is all that was ever available before. But now that the balance sheet of Bitcoin, of strategy is in Bitcoin, these stock options and ETFs are actually kind of funded by Bitcoin because it's on the balance sheet. It's instead of them having cash, they took all their cash, they put it into Bitcoin. So even by holding these, you are technically getting exposure to Bitcoin. And as he said, IBIT sits here is basically just BTC available to Wall Street in a security wrapper. Same way that you take Bitcoin and put it onto Ethereum or AVAX or something else, they wrap it and shoot it across to another chain, but it's still Bitcoin at the end of the day. Then below that is where he created all these new products. So let's go into his explanation on Strike, which is STRK. And then if it doesn't make any sense, I'll explain it, and I'm going to explain the other three as well.
First, Strike, STRK. Strike is structured Bitcoin. So some people, they don't want high return Bitcoin. What they want is something with less downside, less risk, less volatility, more certainty. So how do I actually keep the growth, but get some yield certainty, strip some of the risk? And the way to do it is with a convertible preferred stock. If we look at the spec sheet here, what you can see is that in essence, at $100, a share of Strike offers about $40 worth of equity. So it's like at that level, it's a 40 delta, 35 to 40 delta instrument. So you're getting partial upside on MSTR. You're getting a guaranteed 8% dividend, and you're getting a liquidation preference and seniority in the capital structure. So less volatility, less downside, articulated yield, that you can count on, but you can still keep some of the growth.
So if all of that went over your head, you could think of Strike as this 50% safe bond and 50% growth stock. It's going to typically be for those who want a little bit of low risk, low reward. It is 6 times collateralized, so it's very secure, meaning there is 6 times as much collateral for every share or dollar or whatever you want to call it that is created within this. So like I've mentioned before, and other people have put this out here, that they believe that strategy is going to blow up or whatever the case may be. Saylor's no idiot. He has an MIT engineering degree. That's not something you just get off of, an online course. He's been around since the .com era and before. His companies have survived all of that. And he has clearly done his homework to create different products that the market wants. And he has taken a lot of the tail risk out of it. So with that, like you said, with STRK, you get 8% dividend, like a paycheck every year. A bit of the upside of Bitcoin, MSTR goes up, and less risk, less volatility. And it's for people who want some Bitcoin upside, but also want steady returns, pension funds and hedge funds. And this reminds me of what Plan B said. There are countries like where he's at. I think he's in the Netherlands, but it could just be the EU regulations in general. But he said it makes it very difficult for them to hold the BTC, get in and out of it routinely. So it's easier for them to hold something like this. Maybe not necessarily Strike, could be one of the other three, but there is a place for this, whether you agree with it or not, because unfortunately, the current regulations and access make it very difficult. Remember, in order for us to get into Bitcoin, we still got to go through fiat rails for the most part. Most of us, if not all of us, are still transacting and earning in fiat. Therefore, we have to take that somehow, some way, and get into go from a bank to a centralized exchange. And still, of course, do local Bitcoins, things of that nature, but obviously centralized exchanges is the most common. All right, next, we're gonna look at Strife, STRF. You can think of that as the fortress Bitcoin powered bond for the ultra safe investors. It is senior fixed income. It has regular payouts. It's the first in line to get paid if everything goes wrong, or if anything goes wrong, I should say. And it's for the conservative fixed income investor thinking insurance companies or governments. It is 10x collateralized, so it is super low risk. Remember, STRK was 6x. This is now 10x. Crazy. Next, we have the riskier model, which is STRD, STRD. This is for the risk taker, high yield bond with Bitcoin juice backbone. It is a junior preferred stock, higher yield, higher risk. It's for yield chasers and some hedge funds. It only has 3x collateralized. So it's a moderate security, higher risk, higher reward. And then last is Stretch, I think is what he called it. This is more like your BTC savings account. You could think a monthly yield like a savings account powered by Bitcoin. Is short-term monthly dividend instrument, regular monthly income, minimal exposure to BTC volatility. It's people who want income and not price swings. And this too is 10x collateralized. So as you can see, Saylor is building a Bitcoin-powered Wall Street instead of just ETFs like IBIT, which only give you exposure to BTC. He's creating a credit market backed by Bitcoin, investment products that appeal to big institutional money, and an engine where risk is packaged, sliced, and sold to others. So he's literally putting any and everything on this Bitcoin foundation, using his knowledge of the markets and what clients are looking for, and he's the first to do it. And when you look at BTC treasury companies, no one else comes close. When you add up the total of the top 100 to the other 99, they have, what is that, 334,000. They have, all 99 companies have half as much BTC as Saylor does combined. So like when you add all of them up, they have just half as much. So he is clearly winning at the game of BTC accumulation. And like I told you guys before, these are people that are buying Bitcoin and they are not selling it. So how do you think this is going to affect those who want to sit around and wait to quote unquote buy the dip? There may not be a dip, because any dip that comes, it might only be 10, 20, 30%. These companies are going to raise more capital and buy more of that Bitcoin. They're going to buy that dip and just increase the number that they have. Right now, they're sitting at, we'll call it again, 5% of the supply, especially when you say that there are lost tokens in a Satoshi wallet and whatnot. If they've accumulated 5% of the supply in, we'll call it a year, where the hell are they going to be in 4 years' time, 5 years' time? Don't sleep on this. All right, that's all I got. Smash that HBO special, help brother out. Like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.